I suppose the way to introduce you, Rob, did you co-found or found Scribe?
My name is Rob. I'm one of the co-founders of Scribe, and we help founders find angel investors with data. So we've done that for over 1,200 founders now, and they've collectively had tens of thousands of meetings now and raised well into the millions. So it's a really effective.
And if there was a magic wand to improve transaction rates, if you like, and success between investors and founders, what would you say the market required?
Better founders, if I'm being brutally honest. I think the average founder could be a lot better in general in terms of their business, how much traction they have. I did some calculations on this. I think that the number of SES businesses could go from 2,000 to 20,000.
I'm a client of Rob's. I met him through this whole system, and he hasn't asked me to say this, but I have recommended him to others because the system is good.
Yeah, morning everyone. Good to be here. I've been along to a few of these, and Ollie is a sort of a real anchor of some of these founder communities and joining the dots. So do use Ollie where you can, because he's one of the very best at opening doors and giving people introductions. So for those of you, I want to recognize one or two of you on the call, but for those of you who don't know me, my name is Rob. I'm one of the co-founders of Scribe, and we help founders find angel investors with data. So we've done that for over 1,200 founders now, and I'll share a little bit about what that means. But we're first and foremost a database. So my background is in finance. Quit that world really to try and automate my old job, and we ended up creating a ton of data about UK companies and who their investors were. And over time, we sort of built up a load of infrastructure around how do we automate cold outbound for founders. And yeah, we've run something like 500, 600 proper full campaigns with founders, and they've collectively had tens of thousands of meetings now and raised well into the millions. So yeah, it doesn't work every time. Each founder's different, but it is a really effective kind of tool for people. But I suppose what I wanted to I've brought a little bit of content with me that I wanted to kind of walk through, and I suppose help demystify fundraising early stage, so pre-seed, seed, which I guess is kind of where most of you are at, and sort of explain a little bit about how you can do all of this yourself. Like, you don't necessarily need us to do stuff like this, but that was the kind of idea. So yeah, I've got about kind of 15, 20 minutes of content. I'll keep it quick. But my goal here really is to kind of demystify what it means to raise from angel investors, and particularly if you're doing cold outbound, some of the things that work and some of the things that don't work, and what investors are kind of looking for. So yeah, as I mentioned, we help founders find angel investors with data. So work with over 1,200 founders now and facilitated many meetings with investors. But I suppose what I wanted to kind of talk about really is we run a lot of webinars and things like this. So I've just pulled content from there really. I'm going to set the scene a little bit and share a few common mistakes founders make when they're reaching out to angel investors or fundraising in general. I'm then going to talk about where to find investors. So where do they exist? Where do they hang out? I'll share a little bit about how you can automate your own investor outbound, and then I'll also share some lessons that we've learned from automating those campaigns. What works, what doesn't. So yeah, the first thing to share is, and interesting to chat briefly about this at the beginning, Ollie, is that most funding rounds in the UK are from angels and not VC. It's really easy to see a headline on Sifted that says, well done to this hot AI startup that raised a gazillion pounds and is, changing the world. These funding rounds are very much the exception rather than the rule, particularly for early stage. So VC is very volatile. For the right business model, it can work really well. But angel rounds are very consistent. So if you look at that chart on the right, that is SEIS rounds over the last 14 years, and you can see just how consistent. So roughly 2,000 early stage rounds will happen, and EIS is kind of roughly the same. However, fundraising is really difficult, particularly for first-time founders, and that's for a few reasons. I think like a large part of it is time. Like, I think founders often think that they've got their deck ready and their financial model, and it's going to take them, I don't know, a month, and then they'll get back to working on the business. Funding rounds are way more messy than that, and they take usually a hell of a lot longer. And so if you're not used to rejection, fundraising is a hard place to be, because no's are like a major part of fundraising. You'll expect to hear no a hell of a lot more than you hear the words yes. So it takes a lot longer than people think. Founders also will often target the wrong investors at the wrong time. So, for example, they're pre-seed, pre-revenue, and they're targeting VCs. They'll have 20 VC conversations, and they'll all turn around and say, "Sounds great. Come back later when you've got a bit of traction." So that's super common. And then lastly, I suppose they try raising when their business isn't really ready for investment, like the story's not quite there yet, or it's not clear what you're going to do with the money. And I think probably founders try raising a little bit too soon when they're not. This isn't necessarily about funding readiness. It's not about, how good your data room is. Much more about, what are you raising for? What's the story? Where's your conviction as a founder? And often when you're early stage, you might not have that yet, which is completely fine. So yeah, where do founders find investors? Like where do they hang out? And we break this down into 5 kind of areas, because it much like, if you're selling, like your business development, you'll find that your clients will come from like a few different places. So, they might come from your personal network. That first 20K might be from someone senior that you used to work with that can ignite the first biddy around. It might be introductions, from fellow founders, from people like Ollie, from other investors, that kind of thing. Then you've got clients, so existing prospective clients who are likely to understand your business. Like I think this is so important. Like when you're very early on in your journey, you don't necessarily know how to talk cleanly about your business. Whereas your first clients are most likely to understand what it is that you're doing. Then you've got events, so getting out there, networking, pitching, connecting. They're so valuable. The event that Standup are running, great example. Get in the room, network, speak to people, so valuable. And then you've got data. So this is the section that I want to focus on, which is, data on who is actually investing, and that comes from there are lists that are publicly available. You've got Crunchbase, OpenVC, and then you've got us. I suppose the point that I'm trying to make with this slide is that funding comes from a lot of different sources, and sometimes it all comes from one of these things. But the best founders are sort of getting capital from all of these kind of sources, because fundraising is tough. And so what we do, so this is like a snapshot of the product. So we scrape from Companies House. So we have a data set of over 850,000 investors, split by their name, the company they invested in, how much they invested, and the sector. So if you're an AI startup, so all of this is from Companies House. We just have a lot of clever tech that brings it all together. And the reason this stuff works is that that they're actively investing, or they have invested recently. So you can focus on sector, you can identify intro points in your own, and then you can establish scalable outbound with that data. So we position ourselves as very, very well. We position ourselves as founder friendly. So we have, you can access this data from £95 a month, cancel anytime. So it's very, very affordable. But obviously we have more kind of managed services that help scale that for founders. And so what do you, let's say you've got all of this data, how do I go about reaching them? Like, how do I automate that outbound? And I suppose it's like, there are 3 things going on here, and this is what we do, but like you can do this yourself. Is firstly, you're going to build up that list of relevant investors. You're then going to draft outreach messaging that resonates with those investors. And then you're going to automate the whole thing. So our outbound messaging looks very similar to this, depending on the client and what they're up to. But these are some of the things that we've learned from doing these. It's very simple, like, and we'll, obviously this is being recorded, so you can go back and grab this for yourself. But we recommend blank LinkedIn connection requests. The goal is to create intrigue with investors, and then some kind of a softer call to action. So not asking for investment in the first message, but you're really trying to build relationships with these investors. So would you like to see a bit more? You might want to share some content, something that we find, videos really work quite well with cold outbound. So if you have a product demo video or something like that, that can be really powerful. And then making sure that you've got a closing note. So something that says, I'm not going to contact you anymore. Now, if you've done sales, you'll recognize this structure. It's very similar to kind of cold outreach in general in terms of the rules. So what technology does this? So we use a platform called Meet Alfred, which basically allows you to automate reaching out to 25 to 30 relevant angels every day, of which a certain proportion will accept, usually about 20, maybe 25%, something like that. So you sort of have your sales funnel. In our typical campaigns, we target about 1,000 every 3 months, but so that's the kind of numbers that you need. It's not crazy. You don't need to have like 100,000 investors, but if you're targeted, you've got the right sector, you can establish some kind of a scalable outbound rhythm. And then here on the right, there are some alternatives like, and again, all of this stuff you can use. Some of them I think are even free, but like you've got Lemlist, Dripify, Ducksuit that will all allow you to do LinkedIn outbound. So yeah, I've got like maybe 7 or 8 quick lessons, and I'm gonna canter through these really quickly, and then we can have some quick questions because just conscious of time. This needs updating. It's a lot more than this now, but a few lessons. So firstly, we've noticed, if you're really early, if you're just started the business, really soften the language, like ask for advice, like, can you help me? It'd be great to build my network with you. That works a treat early doors. But if you're halfway through the round, you can definitely sharpen your language and be very clear with investors. I'm raising, I've got 100K left. What do you think? So depending on where you're at in this cycle, you want to be sensitive to the language that you're using. Secondly, follow-ups, book meetings. If you're doing any kind of cold outbound, it's really the following up and the hustling that works. Like most meetings we see through our outbound are booked after 2-3 follow-up messages. Investors are busy. The world doesn't revolve around us as much as we'd like to believe it does. It unfortunately doesn't. So do follow up. We also saw that meetings were hard to get, but likely to result in an investment. So it might feel like a grind. Like if you're doing this yourself, adding people, they're like, oh, I'm getting nowhere. Is it my business? No, they're dealing with a lot of volume. But once you get that meeting, there is a decent chance that it's likely to result in an investment. They've assessed you. They're open-minded. So we do see a good correlation between meetings booked and investors committing. The investor selection matters a lot more than what you write. Like the writing is important, but if you're a fintech and you're targeting biotech investors, your response rate is going to be lower than if you target fintech investors, for example. That's like a really common thing we see. So if you're a healthcare business, we'll use healthcare investors. It's really important to do that. Obviously, you can play around with adjacencies. So depending on if you're building something broad, like we're building technology for kids, you ultimately you'll hit parents who resonate with that on a personal level, but broadly sectors is a very important thing. And that brings me to here. It's just easier for some industries. Like we find that, consumer apps, snack brands, it's really tough to kind of fundraise for, but then, life sciences, industry, vertical SaaS, biotech, things like that do tend to do reasonably well. AI helps, but don't make it your whole story. Like you're solving a problem. Like if you talk about AI, it just turns investors off because they see so much of it. Like you've got to be really careful about how you position. I'm not a marketing expert, but like we see it. Like always dial back what the tech is, dial up the problem that you're solving, and usually there's one reason why you're going to win. And so I've got like a bit more detail on valuations, which are a proxy for success. And then a couple more investors like different. They like good ideas. Like if you're building another, mental health app and you're pre-revenue and you've not got a unique angle on things, it's going to be really difficult for you to raise. But if you've got a mental health app that has an embedded device or like a watch that helps regulate or some cool thing that makes it investable, suddenly that will change the way that you're perceived. So it could be your brand, could be your insight, could be a novel tech or a business model, something like that. LinkedIn is a lot more effective than email. We see very, very low reply rates doing email. Like it can work. We just don't recommend it. LinkedIn, we've done both, but LinkedIn is a lot more effective. LinkedIn profiles really matter, and I'll share a tool that you can use after this, which will help you improve your LinkedIn profile for reaching out to investors cold. So this is all about trust. If you're working full time and trying to fundraise for a business, we find that to be the single biggest issue with cold investor outbound, because investors want to see that you're committed to the business, you're talking about it. So the single worst thing you can do as a founder is be working full time, or at least have this on your LinkedIn profile and try and raise. It's really hard to get any kind of interest from investors if you're not up 100% on the business. I appreciate there's a bit of chicken and egg sometimes with that stuff, but we've definitely noticed that. Best founders are the most organized, have a CRM, ask for intros. We've seen commitments within 7 days. That's obviously the exception rather than the rule, but it can happen. Investors aren't always ready, so keep engaging with people, send updates, ask them for help. Investors aren't always ready, so regular engagement really helps. And then lastly, timing. So timing is quite difficult to manufacture, but it is important. So you want to be able to capture lightning in a bottle. Maybe your peak pre-revenue, this is going to be massive, or you've got loads of traction. We're doing this. One of the hardest times to raise is like right at the beginning, and then like you're kind of muddling along. Now, every business is somewhere on this anyway, but the reason I share this is so that you can try and position your business towards one of those points, that excitement or the sort of growth bit. So yeah, that's kind of I'm not going to walk through this, but I'll share the LinkedIn tool shortly. A few kind of final thoughts, and then happy to jump into Q&A and maybe a quick demo. Investors are time poor. Like it's going to be tougher than you think. Fundraising is about relationships, perseverance, creativity, and also switching things up. Like if it's not working, tweaking, changing, doing all that kind of stuff. So you've got this. I'm going to drop my LinkedIn and in the chat so that people can contact with me. But yeah, that was a quick blast of content that I hope is helpful to people and hopefully trigger something. So happy to kind of answer any questions.
Thank you very much, Rob. Before I put the questions out across the room, I've got a quick question. Do you hold any data on success rates and founders who come to use Scribe and their
so it's roughly half the founders we work with will raise some money through what we do, which is an extremely high success rate for something like this. But we're very transparent in our sales process that like it's not going to work for everyone. But every founder we work with will get meetings with investors. Like we've not seen an outbound campaign where people didn't at least have meetings with investors. So yeah, it's roughly half. But we try and steer before. So I hope that makes sense.
And if there was a magic wand to improve sort of transaction rates, if you like, and success between investors and founders, what would you say the market required?
Better founders, if I'm being brutally honest. I think the average founder could be a lot better in general in terms of their business, how much traction they have. There is capital out there, and I think I did some calculations on this. I think that the number of SES businesses could go from 2,000 to 20,000. But I think that at the moment there's so much competition for capital, and I think that ultimately too many investors are probably losing their money because founders aren't good enough. And so I know that probably feels a bit controversial, and I should be saying that, more investors should be putting money into startups. But I actually think the average startup needs to be a hell of a lot stronger. And so, yeah, I think founders probably need to raise maybe slightly later than they are and generate a bit more traction. I'm not saying this is like impossible to do, but I think that yeah, I think like if we're able to sharpen companies before they go out and raise, I think that will make a world of difference. And I think like you could 10x the amount of companies that would raise as a result.
Thanks, Rob. Before we come to Ed's question, Robin has posed a question in the chat. Do you track, can you report on follow on rounds exit returns for the angels?
It's a good question. We don't. We don't do that. I mean, in theory, I suppose we could track it and start monitoring it, but I think companies like Bohurst do a little bit of that kind of stuff, but it's not something that we do. Yeah, because there's very few exits, so it's hard to kind of track this.
Might want to make a note of that, Rob.
Yeah, it's a really good point.
Yeah.
I just don't know who I'd sell it to, I suppose. I need to find someone to sell it to.
Full disclosure, I'm a client of Rob's. I met him through this whole system, and he hasn't asked me to say this, but I have recommended him to others because the system is good. It is working. Hasn't worked completely for us yet, but because we're still in the process. What I would also say, though, is we are getting the sort of response rates that he's talking about. And what I found quite interesting is that an awful lot of these angel investor types, they will sadly, for some of them, tend to invest too early and not be sophisticated enough about what, they go into something thinking there's going to be a quick turnaround. And if any of you know what I know now, everything takes longer and costs more. Okay. It's so we then talk to people about the stage of company that we're at, and they're like, oh, gee, I wish I'd met you before I'd put my money into my brother-in-law's company because, he's not as far along as you are. So that is a very important thing to be aware of what your own milestones are and how much you need to get to the next milestone. Because if you don't have that part of your story, I think you might have more difficult conversations. I will also reiterate what Rob said, which is when we get to talk to people, they, some of them put conditions and they say, we want to be the last 100,000 into your round. So call us when, everybody wants to be that person, right? But others have said, yeah, I really like it. And we've gotten investors. So the really nice thing again is because you have so many different individual decisions being made, you're not wholly dependent upon that one VC saying yes or no.
Thanks, Ed. I'm glad it's working.
Excellent. Thank you very much, Ed. Thanks for that overview. Any additional questions for Rob whilst he's with us this morning? Nick, you got anything for us as a seasoned founder?
Well, I've met Rob before, so good to see you, Rob. Could have used your services on our pre-seed. We eventually did get, I think, 20 angels as part of our pre-seed round, and we got them from 3 of the 5 sources that you showed. So it was interesting seeing that map. We are going for seed now, but I think we're probably going to go VC, only because we've already got a couple who have expressed interest. And if we can just get it all done with 1 or 2, I think that would potentially be easier. But I haven't seen the term sheets yet, so ask me again once I've had a read through.
Nice. Well done. That's awesome.
Thank you.
Yeah, I think seed Series A, if you're getting to that kind of level and growth rate and you're raising capital, then yeah, venture is going to make a lot more sense.
Excellent. Thank you very much, Nick. Any last questions for Rob this morning? Anyone in the room thinking about raising? Anyone want to look at sectors and the charts that Rob highlighted earlier? Any questions around that at all?
Sure. We are on the process of developing on mobility equipment in South Indian terrain for harvesting tea. So my company is a 25-year-old company which I founded, and I survived 25 years. And now with this new trial, one company from Australia, Williams Tea, and Tata Tea had a joint venture and started a mobility system. Harvesting it failed. So almost from 2002 to 2014 they have done. So I took that failed project and I am doing my trial. So this trial will be over within 1 year. Once the 1 year is over, so my company will be requiring a lot of investors. So I was thinking about VC. Now I am coming across through your program about angels. So
Yeah.
it will
Well
take.
done. That's awesome. I mean, well done on the progress. Very, very cool. I think best as you're based in India, our technology is not really designed for that just because we focus on UK investors. It's UK data, so it'll be less relevant for you. But there will be, angel networks and Indian investors that would back something like this. I think one thing we've learned from working with non-UK startups sometimes is that angels are very geographically aware, so they want to usually back companies in their home countries. There are some exceptions to that, but generally most investors will like to invest companies in their own kind of, I don't know, their area or city or whatever it might be. Something to think about as you raise.
Yeah, we are operating from Australia and India, so there is a
So maybe
possibility.
Australia would be a good one.
Yeah, we will be forming a company. Planet Agri Solutions will be from Australia. So
Nice.
next month I'll be traveling, and I'm just thinking. So from Scribe, I understand about angels now.
Good. Nice. There's a bit of a UK focus to it, but hopefully it's
Yes, yes.
useful nonetheless.
Yeah, because I studied in Aberdeen, Scotland, so I got this link for attending your
Oh,
seminar.
nice.
Thank you
Thank
very
you
much.
very much. Thanks for that. Well, Rob, it's been fantastic having you on. We're looking forward to having you and seeing you on the day of our event on the 16th of July, hosted by Barclays Eagle Labs in Shoreditch. I think a number of you will be there on the day as well, and store up any questions you might have for Rob. And I'm sure you'll be happy. On the day, there are going to be a number of active investors in the room, and it will be a fantastic opportunity to speak to some active angels and VCs. So yeah, we're looking forward to that. And Rob, if you know any investors, share the link with them if they want to come along. It'd be a great opportunity. Yeah. So yeah, thanks all. Have a great weekend. We're back next week, and see you all soon.
Thanks a lot for having me on.
Rob, you're going to get a lot of love and pick up the LinkedIn over the next few days to get ready. All right.
I'd love to see it. Nice one. Thanks, everybody. Really appreciate it.
Thanks, guys. Thank you.
Bye.